How's it going out there? It's June 23rd. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So today, I want to talk to you about something that's very personal to me, and it's the security token industry. It's called digital tokens, tokenization, all those terms. Probably see it. Lots of news out there about them. We start our own security token, Curzio equity owners. But I want to go back to where this all started. Because in 2017, that's when I really started following crypto religiously. A lot of friends were in it, and some high-profile people that were in it. And I got infatuated with it. Then in 2018, mid-2018, which is a good time to start a crypto newsletter. That's what we did at Curzio Research. Crypto Intelligence we launched when the market really crashed. And I started to analyze hundreds of cryptos. So remember, I'm a research analyst, right? So I really dig deep. You see my videos if you're a subscriber, through all my newsletters and products. I'm actually doing the research. I really dig it deep. That's what I love. What I'm passionate about. And after getting through the first 100, I realized a trend. That over 90% of these tokens were complete horseshit. They were frauds. I couldn't find any information out on them. There's no financials, no insider ownership, no updated cap table, who's selling, who's not selling. Most of these utility tokens, they're called, not security tokens, utility tokens, they have zero utilities. So you're not getting an equity stake in them if you bought them. So the value of these things are only tied to the utility feature, or how you can use those tokens to purchase things where you might gain access to certain things, whatever. That's a utility function. For example, if you look at the Binance token, you could use that token to lower your trading fees on the platform. You could book trips. There's tons of uses. So there's value to that token. You're not getting equity stake, but there is value to that token. It's a utility. And think Dave & Buster's. If you have one of those cards, that card is very, very valuable. You put money on it, you play video games. You can use that at all at Dave & Buster's. But if Dave & Buster's closed, you could have $1 million on that card and it's worthless. It's like a utility. You can't cash it back in and say, hey, it's $100. No, too bad. But most of these tokens, they have no utility features. In other words, 90% of these things, again, we're talking utility tokens, should be worthless, where they raise lots of money through ICOs, 17, 16, even 17, 18. The management teams probably took more than 50% of that cash to buy new cars or homes without having to disclose anything. You don't know where that money went. Nothing. A lot of this stuff is raised overseas. And very few people back then when I started digging in, even today, I mean, I don't realize that most of these utility tokens are absolutely worthless. I know, I talked to them. They're buying dogecoin, all this stuff. I'm like, man, they have no features. They're trying to create features. Companies out there saying you should use dogecoin. Maybe to buy a few products here and there, but really, it was created as a joke. We all know it. Now, I love the idea of crypto. And again, thought it was an amazing industry along with blockchain technology. I think a lot of people, a lot of companies agree, blockchain. But what we need here is more regulation. I'm not talking about regulating the whole entire thing where it's crazy, but it needs to be regulated to where investors know their money is safe. It's not going to be stolen without any consequences. If you have something overseas and you have $100,000 in Bitcoin, it gets stolen, don't call the SEC. They're not doing anything for you. There's no regulatory authorities going to do anything for you. Like, sorry. Binance got hacked. Forgot how many millions of dollars, and they paid it back right away. Real company. There is some great companies in this space, but very, very few. So I looked at this industry and said, okay, it has to get regulated. And that's when I started to research security tokens. So way like businesses, Curzio Research, small growth companies, it's a way for them to raise money without having to go to investment banks where they want board seats and they want special price discounts and warrants that they could sell immediately. Again, they're not in for the long term. You could see what SPACs are all about. Let's look at Chamath. He's out of these things right away. This is the greatest thing ever. Virgin Galactic is the greatest thing. He's out of it. A couple years later, made his money. Did what he had to do to promote it, right? That's normal. That's par for the course. I mean, you can be pissed at the guy. That's par for the course with venture capital. They're not in long term. Even Peter Thiel winded up selling Facebook. Man, if I had to guess at the price, I would say, what is it? $900 billion valuation. He probably sold it around a $350 billion valuation, sold it really quick, got out of it. Made his money, over $2 billion. Good for him. He was in very, very, very early, which is kind of like security tokens. Gives you an opportunity to get into these things early. But the point is, you don't have to go to investment banks, and we can eventually bring our company public, which Curzio Research is public right now, just 1 year later. 1 year later. Now, this time frame is critical for you to understand. And trust me, guys, even if you're not security tokens, you should understand this industry because it could give you life-changing gains. It gives you an opportunity to invest like a venture capitalist in early-stage growth companies, not after they IPO'd at $20 billion, $10 billion, $80 billion valuations, or even $100 billion valuation like Coinbase did, which has now come down, what, 40%, 50% from its highs? So that 1 year time frame, it's critical. Since if we're going to raise money for Curzio Research through a security token, hey, it's great for us. We're raising money. Now we can use that money to grow our business. It's also nice paying much lower fees to go public, which is a fortune if you go on exchanges, accounting, regulation, all that stuff. It's crazy. But the kicker to this industry is, and someone who's studied trends and goes to the Consumer Electronics Show for the last, 8, 9 years, always been ahead of trends because I have great, great contacts. The kicker here is early investors. These are the people that believe in your brand, that invested even in our company, a CEO token, enough to invest in it, right? At the very, very early stages. But they're going to be able to trade this token just 1 year later. And it's awesome considering the liquidity period, when you look at statistics, for most private companies that people invest in, is 7 to 10 years. What does that mean? What's a liquidity period? It means a time for you to cash out. Meaning the ways you cash out are through an IPO getting acquired, and for a private company, that takes 7 to 10 years. That's a long time. As you know, most private companies, they never make it to that IPO stage or even get acquired. A lot of these businesses fail. So what does that mean? You're investing in a private company. You have your money locked up for 7 years. You can't do anything. And say if you see management really, I'm going to curse here, fucking up in year 2 or 3, you're stuck. You're probably going to lose your entire investment. You're in it. There's no way for you to get out. But being able to trade 1 year later is huge. Because say if I mess up with my business, or you see declining trends, which, we're reporting every year, and we're going to have every 6 months pretty soon, that we're going to be reporting. Going to go into that later because we have a big annual meeting coming up that anyone can attend, learn more about our company's CEO token, our first ever, very, very exciting. Go over that later, podcast. But, being able to trade 1 year later, it's such a huge point. And this system allows investors to buy into companies, and I mentioned earlier, at the super early stages of growth. Because if you see what's happening today, companies do what? Seed round, Series A, B, C, D, whatever. And every round that these investors invest in, they get to invest at a huge discount in the next round, which is huge. What does that mean? It means when this company eventually goes public, they're blowing out of it, especially most of their position. They're going to remain long-term holders. No, they want that money to do the same thing, and they want to keep rolling over. That's how they make money. But they do 6 rounds of financing. And then they IPO, and they dump this to retail investors during the IPO when it's a multi-billion-dollar valuation. That's what they do. That's what the retail investor, just like SPACs. Without the retail investor, SPACs are shit. That's why you've seen them go to shit, because now they're not going from 10 to 15 without even having a business model or looking at a company to purchase. Now they're going to 10, 9, and 8. And the companies that they're purchasing, now they have to disclose the warrants and the pipe deals. These things are like $200-300 million. These holding companies, right, that are looking, it's a SPAC, it's looking for a company to invest in, and you'll notice that they'll buy a company for $1 billion or $2 billion. It's only $300 million. Where they get the rest of the money from? Now they go to individual funds and they do pipe deals. And they say, hey, we'll give this to you at they don't care. They're in at 10 cents. We'll give this to you at 3. We'll give it to you at 4. Here's warrants. You could sell it. And they give away the 4th. This way, as long as a retail investor's buying and getting fucked, everything works with SPACs. But now retail investors are smartening up and saying, wow, we're getting killed on SPACs and they're not doing it anymore. That's why you see in SPAC. You need the retail investor, right? You need that sucker at the end. This way, all this stuff works and everyone else gets rich. It's the way it is. I'm telling you how it is. I'm trying to help you. I mean, Coinbase is a great example of this. I love it now. I think it's cheap, but it came out what? At 3 something, went to 425, and where is it, 220 today? I mean, there's a holding our newsletter. We recommended it. We're down like 5% on it. Recommend a lot lower. I think people don't realize that company is going to do fantastic even when Bitcoin comes down, because the volatility is, You're looking at the volume and the trading volume. A lot of this going through Coinbase is massive. Even on downturns is massive. And that's how they make their fees. They're going to blow out the quarter neck coming, whatever. It's a month away, 2 months away. But Coinbase is not the only example. I give hundreds of examples of this system of how it works. The private investors get in, they invest in the seed rounds, they get discounts for every round that they want to invest in after that. They go IPO, they blow out of this stuff because you're buying shares that people are selling, and it's the insiders that are selling. And they make a fortune on these IPOs. And some of these companies work out great. Facebook, a lot of them that came out public worked great. Snowflake didn't really work out too great, though. It worked out great for the insiders. Not yet. People think it's going to go a lot higher. Still very expensive. Anyway, my point is this. Security tokens provide something that I haven't seen in Wall Street or investment banking industry, where they provide massive benefits to both the issuer and the investors. And when you have a better solution that benefits everyone involved, if you want to disrupt a market, find something that's easier, that brings companies and their customers closer together, something that's cheaper, and it'll get widely adopted and scale almost immediately. That's how you disrupt markets. And I saw this as a disruption because it's great for everybody involved. Security tokens, not utility tokens. And Uber's a great example of how this works. Hey, Uber's great for the company. You're generating tons of money. Not huge expenses. People are using their own cars, which is really cool. So you don't have to worry about that. It's great for their customers. Customers enjoy it. It's a safer experience. I mean, I grew up in New York. Definitely safer. Taking a taxi. Lower price. Nicer cars. Cool people. Could rate them. More interactive. It's great for everyone involved. If you look at Uber, it's a $100 billion company. Right? That's how it works. But retail investors were only able to get in when it IPO'd at what was it, $85 billion, $90 billion valuation? I mean, it's 50-something. I think it IPO'd at like 45, I think. And this was what, 2019? But you're looking at investors buying Uber, you couldn't participate in that early stage growth at all. At all. And maybe Uber goes to a $200 billion valuation. That's fine. But imagine being able to see this and invest early, which retail investors don't have access to, which sucks. It's the big money. But security tokens changes this, checks off all the boxes. It's an amazing solution that I knew would eventually take off like a wildfire. Now, Curzio Research, we became one of the first security tokens in the world where we did a Reg D offering, which is for accredited investors. And then 1 year, our CEO token was free trading to retail investors, where any retail investor could buy it. But surprisingly, to get this kind of access for retail investors, I had to list our CEO token on the Merge exchange. Merge, MERJ, is an awesome company. It's based in the Seychelles, so it's overseas. And it's an actual exchange. You have to understand, it's an actual exchange, not an alternative trading platform, an ATS they're called, which is what T0 is and Open Finance was. A lot of companies that are coming out trading these things are alternative trading platforms on an exchange. So they have the same rules, Merge does, as the New York Stock Exchange and any other global exchange. So we went through a tough regulatory process to get listed there. But it's overseas, right? The problem is we're a U.S.-based company, and it would be nice to trade it in the U.S., but there's no alternative trading system in the U.S. to trade security tokens other than T0, which had 3 tokens on their site, but they haven't added another security token in 18 months, and now it's looking to sell itself. But there's really nothing out there. And it's tough. And there's nothing out there because a lot of money needs to be put into this system, and the SEC is not really regulating or saying what they're going to do, and no one wants to go out there and spend $20, $30 million or raise money where the SEC could be like, you know what, we're not really going to allow this. They allow utility tokens because they're deemed not to be securities, but how is Doge not a security? How is anything outside maybe Bitcoin and Ethereum not a security? Or maybe Litecoin and a few others. They're all securities. They're all securities. They check off every definition of securities. If they're labeled securities, they have to report. They have to report everything. All these things are gone. All these things are gone. And you know what? Now that people are getting destroyed in Dogecoin, $70 billion in value lost. Mark Cuban promoting another token. We'll talk about that later with Daniel. Went to zero, got crushed. And now you see people getting crushed on things that they really can't get any information. It's funny, Cuban, loved Dogecoin and promoting it, and then promoted, this Titan token, it was called. Iron Finance was the name. So the Titan token, then it went to zero, and then he's like, "Oh, we need more regulation." But now you're gonna see it when everyone's making money, everyone's cool. It's fine. It's fine. Everything's all right. Don't worry about it. But now you're gonna see SEC come down in this industry. It's gonna open up the door to security tokens because this makes sense. And now something very, very interesting happened this week. It's major, major news in this industry. So Morgan Stanley and other venture firms invested $47 million in Securitize. That's one of our partners who basically created our token. Still use it, their platform. Great guys. And this is the first investment by Morgan Stanley into blockchain. And they chose Securitize. Now, Securitize is set to launch their alternative trading platform within 2 months or so, around 2 months. I think they have everything in place, just waiting. It's always a tough process when, regulatory process, but I think they're going to do it within 2 months. But this platform is going to start, and it has to start as an institutional trading platform. So if I listed my token on that platform, only my institutional investors or the guys who came in the Reg D would be able to trade it, not to retail investors, which defeats the purpose of this industry. It really does. And if you look at Reg A has come so far. We've got companies, one of the companies' security token has just raised $70 million. But I could tell you something else I'm going to tell you in the security token industry. If you do a Reg A offering, which is available to retail investors, they can invest in private companies, and you do it through a security token, you can't trade that security token anywhere. And when you do a Reg A, it's supposed to go free trading almost immediately. But there's no exchanges here that allow retail investors yet, which is insane. But now you're looking at Securitize. They're launching this trading platform. Again, it's going to start an institutional trading platform, only available to credit investors. Then Securitize plans on launching a retail platform, which would probably happen about 12 months from now, which could really jumpstart this incredible industry. Because now you're going to see it, all these security tokens trading on a regulated alternative trading platform. And that's when you're going to see the volume. That's when you're going to see something like Coinbase. That's when you're going to see all these things. But investors are going to get more clarity. They're going to know what they're buying. There's going to be reporting. That's what's great about this industry. You're going to have that opportunity to invest in these companies near the ground floor. Not Uber at an $80 billion valuation. Facebook, what was it? 100, whatever it was. I mean, that sucks. You're buying this thing. You're like, yeah, I have so many friends like, oh, I'm going to buy the Lyft IPO. Really? Because there's tons of insiders that are dying to sell it to you. You knew that thing was going to crash. I mean, they faked their numbers and everything. I'm surprised the SEC didn't go after them. They're saying they captured a certain percentage of the industry, and that report was based on someone who was a major shareholder. Their company's a major shareholder, and they printed reports showing that their stats were much better. Of course. So it's a conflict of interest. Right? Nobody cares. It's Wall Street, right? Nobody cares. Nobody's going to look into it. They don't have the time. Anyway, you get my point. Now, where am I going with all this, and why is this so important to you? Today's guest is Hester Peirce. She's the commissioner at the Securities and Exchange Commission, SEC. She's one of 5 appointed by the president. And Hester knows a lot about the securities industry as a whole. Been in securities almost her whole life. Worked as senior counsel in the U.S. Senate Committee, Banking, Housing, and Urban Affairs, where she advised ranking members of the committee on security issues. She served as counsel to the SEC commissioner, which is Paul Atkins. Also worked as staff attorney in the SEC's Division of Investment Management. So pretty safe to say that she knows her stuff when it comes to securities. And Hester has been dubbed Crypto Mom because she truly believes in crypto. And she talks about it openly, which you're going to hear in a minute. She talks about it in the public, which she's going to state, of course, our own opinion, not that the SEC or the commissioners. But this interview was very, very important to me because I'm looking for answers. I want answers. And to find them, you have to go to the top. And that's why I love how many people listen to this podcast, because we're able to get guests like this. There's not too many security firms, not that we're a security firm, but, a financial firm that are going to talk to the SEC, get the SEC on a public platform like this. I want answers, though. And Hester's awesome. But to find these answers, you need to go to the top. Like, why is there a bottleneck to regulate security tokens, alternative trading platforms that are going to trade security tokens in the United States while we have utility tokens like Doge, which we know was started as a complete joke, have almost no regulation where anyone can open an account on Coinbase or Kraken right now and trade it? It's amazing. I mean, you're looking at Saturday Night Live was a top for that at 75 cents. And then you want to know that it came down to whatever, 40 cents. And then Coinbase like, hey, we're trading Dogecoin. And everyone came out and said they're trading Dogecoin. And then the thing really collapsed, which usually happens. We know this best in newsletter industry. If you are very, 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 very excited about an idea to get in, chances are it's at its all-time high and you're going to lose money. That's what happens. That's when you're most excited. Nobody wanted uranium 5 years ago, 4 years ago, 3 years ago. Now a lot of these things are up 250%. And yes, they pulled back 20%. But a lot of people are talking uranium now. That's the way it goes at almost every single trend. Nobody cares until these things go higher and higher and higher. Then everyone gets excited because everyone's talking about it around water coolers. But that's something I want to know. How come Doge, anyone can open an account on Coinbase and trade something that has no financials, no nothing, but we can't get more security tokens traded? Because there's lots of companies that have reached out to me. There's lots of companies in the works, hundreds of them, that are going to raise money through this process. But we go even deeper on this interview, especially within the industry, which I truly believe this is going to be $1 trillion market inside of 7 years. I told you, checks off all the boxes. So this is an awesome interview. Hester, she's really cool, really smart. Not just saying that because she's the SEC commissioner. She's genuine. I truly believe in her opinions, where you see a lot of talking heads out there just shouting out what everybody wants to hear. She's not like that. She's an out-of-the-box thinker, someone that could help unleash this incredible industry, which Curzio Research is right at the forefront. So without further ado, here's my interview with Hester Peirce. Hester Peirce, thank you so much for joining us on Wall Street Unplugged.
It's great to be here. Thanks for having me. I have to start with my disclaimer, which is that my views are my own views, not necessarily those of the SEC or my fellow commissioners, which is usually obvious from what I say.
That's great. Listen, I'm really looking forward to this interview. We are in the crypto world, and I know you get a lot of questions. I see you everywhere now. So I know this kind of excites you. You've been dubbed the crypto mom, which is cool.
Yeah, although there's a move to strip me of the title this week. So we'll see if I retain the title. A Twitter poll trying to get rid of the title.
Yeah, well, one of the things that you said to earn that title is, we have to be careful not to overregulate this industry, the crypto industry, because it could stifle innovation. And right now, it seems that there's little regulation or a big gray area. And you know as well as I do, going back to your background, gray is bad when it comes to institutions, right? It's either yes or no would be better than gray because there's less money coming into the system and you're not seeing ETFs approved. But you still have people that want to try because they don't know yet. How do we eliminate the gray area? And how do you push that? Because there's 5 commissioners. And I know, like you said at the beginning of the disclaimer, your views are your own, not necessarily everyone from the SEC. But how do we get this pushed forward? Or let's say we're not going to regulate it. But I just think either saying yes or no is better than being in that gray area.
No, you're exactly right. Institutions really need the regulatory clarity to come into the space. I mean, even individuals are asking for it, but institutions, it's kind of a basic parameter that they need to have set. They need to know what the rules of the road are, and then they can operate within those rules. So, I think there are a few things that we can do. One thing that I've been trying to do is just gather from people what the questions are. Where are those gray areas? Where are there things that they're wondering about in terms of what they can do and what they can't do? And then I think we just have to tackle each one of those on its own. So, there are a couple things that come to mind easily. One is trying to define the line between what's a securities offering and what's not. Another is trying to set the ground rules for custody in this space. And another is trying to think through what the ground rules are for an exchange traded product. Now, obviously, we have provided some clarity in that regard, but I think we may need to revisit that. I am optimistic, though. We have a new chair who has a lot of experience thinking about these kinds of issues and knows this space quite well. So I'm optimistic that between that and the growing interest in the crypto world, we're going to see some clarity coming up soon.
No, that's great news because we actually launched a security token here, Curzio Equity Owners, and we've put this in the process 2 years ago. There are no regulations, and we have, our financials are audited. The reason why I went this route is because when I looked at 2018, I thought that a lot of these are securities, right? And I thought that there would be more regulation coming down. This would transfer into security tokens. But now to the point that we were talking about with security tokens, it seems like from my end of the industry, it's more difficult to get this industry going, which is this is, securities based, backed by assets, right? They're not just utility tokens. When do you see this? You say you're optimistic, but when do you see this? Because I'm excited for this. We based our company on this. We're excited. We're a growing company, but there's just people out there that don't want to start alternative trading platforms. They're afraid to put money into it because, again, of that gray area, right? If you come in, it's $20-30 million, licenses, everything. It's a lot of money has to go into something that, with a signature may not exist. So when do you see this happening? And I know that's a hard question to ask, but you're optimistic by talking to the other commissioners, or do you think, hey, maybe it's a year? Like how close is that?
Well, any new chairman coming in has a lot on his agenda, and so that's no different with Chair Gensler, and events have a way of overtaking even the most well thought out and well designed agenda. So, we'll see where crypto falls on that agenda. I think people in the crypto space tend to be fairly, they move fast, and they would hope that regulators would follow suit and also move fast. But I think that we will see some progress under this chairman. I think he's likely to want to work to provide regulatory clarity here, and maybe we'll get some more guidance and more nudging from Capitol Hill, for example. So it remains to be seen just how quickly. But in the meantime, I really urge everyone who's involved in this space to proceed with care, to think about the securities law angles of what you do. If you're trying to create something, to get the advice and the help that you need, to come talk to our FinHub, which is our sort of outward facing point of connection for people in the fintech world. So come talk to them, lay out what your plans are. It's good to come early. And then remember that if you're an investor or someone who's looking to purchase crypto, you should not assume that anything has a regulatory seal of approval. We don't do that for any products, and there's certainly nothing that has the SEC seal of approval.
One of the things that you said, and this is from an interview, someone's asking you about Dogecoin, and I love what you said. You said, listen, I believe in personal responsibility. That's a bold statement because to me, I agree with you, right? You should have personal responsibility and know what you're investing in. But sometimes these people don't know what they're investing in. So is it really difficult to assume that? Because I could see, if I had to guess, I would say about 70% of the people in crypto do not know that they're not actually getting an equity stake in these things. And they probably believe that they're securities. They don't know if somebody comes in and takes them over for, say, $50 billion, that they're not going to get anything because they don't have an equity stake in it. But So how do we get that to the personal responsibility part to really educate these people? Is that like the crypto job? I mean, is that something you're looking for? Because it seems like we're really close here coming together where, we all want the same thing. This is a $1.5 trillion industry now. It's very, very big, something you can't ignore. And it seems like we're pretty close. But I just love that personal responsibility part. And how far is that going to be taken? Because that's just logical, right? That just makes sense. And if that's true, I could see this thing passing or having more regulation a lot quicker.
Well, I mean, I give the same advice with respect to crypto that I give with respect to anything, which is you really need to think about your risk tolerance before you get involved in purchasing anything. And, you need to be realistic with yourself about the volatility of an asset class if you're getting involved in that. And often the greatest lessons for investors or just in life come from what you've done wrong. So my guess is that some of the people in this space, like in many other spaces, will find that they made some wrong assumptions, and maybe next time they'll be more careful. But it's incumbent upon us as a regulator to try to encourage people to think carefully about the financial decisions they make. And I think it's incumbent upon everyone in society, just again, to take personal responsibility. It's the money that you worked for. Now think carefully about what you want to do with it. My view on personal responsibility and on the real fundamental importance of allowing individuals to make decisions about their own lives I have a very strong view about that, and some of my regulatory colleagues are more willing to override those decisions than I am. But at least we can have those conversations, and at least I think as Americans we can all appreciate that with freedom also comes responsibility.
No, well said, well said. Now, could you take me through the system of how it works, of how an approval will work? There's 5 commissioners. You're one of them. Is it a certain approval? Is it, 3 have to approve and 2? Is it kind of like a voting process? How does something, say if, 4 of you agree and say, all right, you know what, we're going to do some kind of regulation in crypto, or we're going to launch ETFs, just say, what's the process for that to happen?
Well, the process is a little bit different depending on what you're talking about. So the chair of the agency actually sets the agenda. That's part of his responsibility, and so he then directs the staff to prepare recommendations for the rest of us to vote on. So with a rule, we'll get a recommendation from the staff. Here's a rule that you should propose, and then that rule would go out for public comment. If we vote by majority to put it out for public comment, goes out for public comment, and then we get comments back, and then again we once again look at a recommendation from the staff if the staff is recommending to adopt the rule, and we'll vote on it again, and it takes a majority vote. Now, some things like you mentioned in exchange traded product application, something like that is a bit more complicated because a lot of those decisions are actually made by something called delegated authority, which means the commission has delegated the authority to the staff to make those decisions. So sometimes those decisions are just made by the staff without direct involvement from the commission. Now, the commission can pull those decisions up and say, you know what, staff, we want to make that decision ourselves. And that can happen at several different stages in the process. And then enforcement actions are, again, majority vote. The staff makes a recommendation and it's a majority vote to move forward or not.
Okay, so let's change tunes here, because I know everybody loves to pick your mind on crypto, and they're excited that you're in favor of crypto, and at least you have having that conversation out there. But before becoming SEC commissioner, you were United States Senate Committee on Banking, Housing, and Urban Affairs. You were a former staff member there. You were a big part of the regulatory reform in the financial crisis during 2008. And in 2012, you wrote a book about, and it's called Dodd-Frank, What It Does and Why It's Flawed. And you talked about, or you argued for economic freedom and against the idea that markets could be improved through regulatory micromanagement. So are banks right now, or financial industry, are they being micromanaged right now? It's on the regulatory front, or regulatory micromanaged? And how do we get to a medium where you see the capital on banks' balance sheets, and they probably want to have that more freedom, but at the same time, the credit crisis came out of nowhere, and they need to be regulated. So how do you find that medium in between? Because you always see the pendulum swing to each end based on if there's a crisis or not a crisis. But I guess it's kind of hard, right, to just get right in the middle and say, hey, we want you guys to grow, but you need to behave.
Yeah, I mean, this is a long time debate in the financial regulatory world of what exactly the financial regulatory framework should look like. And we do in the United States have a rather complicated and fragmented federal financial regulatory framework. And that can be good because it can allow for some different experimentation about different approaches to things, but it can also be a challenge for anyone trying to innovate in this area, or any new entrants trying to come in and trying to figure out where would they fit within that framework. Just speaking from the SEC side of things, you asked, do we have the balance right? Are we micromanaging too much? I tend to think that it's good for us to take a principles-based approach and to leave the method of achieving a particular objective up to the individual market participant. And then, if they achieve that objective, that's great. If they don't, then that's the time that we'll come in, either on an examination level to look at the firm and say, hey, you're not meeting our objectives, you better get your act together. Or if they don't, then, with an enforcement action. So I tend to be of the view, let's have some broad parameters and allow people pretty broad freedom within those parameters. I think it's really a good way of ensuring that there's competition, that There are low barriers to entry. If you have a really complicated rule book, it's really difficult for someone to jump into the game because you can't figure out all the rules. And the incumbents know all the rules. They've hired all the pricey lawyers, so they can play in a complicated field of rules, whereas new entrants can't come into that. So I worry about innovation if we have too complicated of a rule book, and I worry about competition. So that's kind of my view is we still have work to do to get our rule book to the right place, but it's something that I continue to look forward to working on and enjoy working on.
No, it's great stuff. And just even in crypto, is there like a concern that we are falling behind other countries when it comes to, because like we mentioned before about, capital, especially institutional capital, and, their job is to be prudent, right? So they have fiduciary responsibility, but when there's really a gray area in place, which we talked about before, it's hard for them to invest. But also, you mentioned an innovation front, and that's big, especially in a brand new industry like crypto. And you could even say, also in banking on the innovation front, is there a fear of falling behind where it seems like Japan has figured this out, Singapore's figuring out, and this market gets bigger and bigger? Is there any fear of that? Is that a big concern? Or it's like, hey, we just need to sit down and regulate this? Or is it like, hey, we kind of need to do this kind of quickly because, everyone else seems like they're a little bit ahead of us here. And even U.S. businesses within crypto seem like, just to be on the safe side, they're launching businesses outside the U.S. because they're not too sure of the rules that are going to happen in the U.S.
Yeah, I mean, certainly I worry about losing innovation. I worry about losing talent. I want all the best people to come to the U.S. and to do their innovation here in the U.S. and to participate in U.S. markets, to deal with U.S. persons, and to look forward to having U.S. involvement in their projects. And when you've got an unclear regulatory structure, that certainly scares people away. And I think some other countries have been more nimble at trying to adjust their regulatory frameworks to accommodate crypto. And we maybe a bit have rested on our laurels. We have the deepest capital markets in the world, and we have just wonderfully smart, talented people here. And so a lot of innovation happens here just because of that. But when you don't let the regulatory framework adapt, then you do run the risk of losing some of that talent. Now, look, I understand my colleagues' concerns too, and the reason why some of them are a bit more hesitant to make adjustments just for crypto. I mean, they've seen a lot of scams in the ICO space, and they've seen a lot of people who have just conducted outright frauds and just called it crypto. And so that is an unfortunate thing, and it's made a lot of people deal very cautiously. And I also understand the point of view that our securities laws are meant to be open-ended. They're meant to work flexibly. And so why should we make any adjustments for crypto? Now, that point of view is one that I once held, but having seen unique aspects of crypto, I really think we need to make some adjustments because I think there are some unique aspects to this industry that don't mesh quite right with our existing set of rules.
No, I definitely well said. And yes, I have to say that I really appreciate you coming on. I mean, just the dialogue is really cool, right? That we're opening this up where, sometimes it's very silent and you don't know what's coming. I see you out there a lot. I really appreciate coming to this podcast and being vocal about it. But it's not that, for me, I don't feel like you're pushing an agenda. For you, I feel like, hey, let's get more information on this. Let's work together. Let's get this out. And we need to have that conversation. And for you to be doing that right now, I think it's great for the crypto industry. I think it's great in general. I really love what you're doing. So I really appreciate you coming to this podcast. And I actually learned a lot today. So great job.
Well, thanks for having me. And my door is always open. It's a virtual door now, but I really do want people to come talk to me.
Nah, that's great stuff. Thank you so much for coming on.
Thanks for having me.
Hey, it's great stuff from Hester. I really appreciate her doing this interview. And it's really relevant right now because you're about to see this industry, security tokens, boom. Especially now we have $70 billion in market cap wiped off of Dogecoin, which is heavily promoted by billionaires. prominent social media personalities, knowing that this was a bullshit token. There's another one that went bankrupt recently, that went to zero. That was heavily promoted. And it's funny that this billionaire wants more regulation in the industry now, which is kind of ironic when you think about it. Isn't it a little ironic? That you're promoting something that you don't know anything about, you can't see the financials or anything on social media, and then it goes bust. And now you're like, wow, we need more regulation? Anyway, we'll get to that later on with Daniel. But if you look at the industry, people are starting to get crushed by these shit tokens. When everyone's making money, nobody cares. I said that earlier. Now the SEC is going to be all over this. You're going to see lots more complaints coming in, people losing their life savings. That's going to lead to more regulation, the rise of security tokens. We're seeing that. I thought it happened already from 2018 till now. I thought we'd see sweeping regulations, get rid of all this garbage and scams, so many utility tokens. That would definitely open the door to security tokens where this is something where you get an actual equity stake. They trade similar to a stock. They're open to retail investors. Hey, any one of you listening to this right now can invest in an early stage company like ours. The ground floor. Like Peter Thiel and Facebook. Holy cow. What are you investing in pennies? And how great is that? Imagine you becoming that investor when instead of waiting for the IPO to invest, when all these insiders looking to sell, now you're on the inside and you're the one that's selling to all these new investors in the IPO at the multi-billion-dollar valuation, with the chance you could earn 20,000% plus gains, which are life-changing. That's not open to most of you out there. Almost all of you for retail investors. Security tokens changes that. And it checks off all those boxes. I have to tell you, with everything going on with regular crypto, a lot of these BS tokens getting crushed, these are securities, guys. I don't care what anybody says. They're securities. They trade securities, which means they should have to report. And that's coming. And that's going to open a door. Security tokens already has. Because everything's coming together right now. It's Morgan Stanley, a big investment, $47 million to securitize. A lot of shit tokens getting killed. Investors in their life savings, SEC. Hester Peirce talking about security tokens, talking more and more about this industry. Likely see more regulation coming, the right regulation coming. Then you have the merge exchange starting to get even more listings. Securities telling me more people raising money for security tokens. Even you guys out there, I'm getting so many calls. Frank, I'd like to do this. I'd like to follow your lead. Please get in touch with us, frankcurzioresearch.com, because, man, we've been put through the grinder. It's been a tough road, and it's expected. It's new. Technology's changing. Regulation's changing. But being first means we have to change a lot during those early stages, which has been a little tough for early investors. We got great investors there. Again, it's how our company does. That's what you're investing in. But still, we want to be able to trade this token. And we want to have liquidity. And we've taken necessary steps to do that. And it's very, very exciting. The security token, the industry, it's finally here. I'm excited for our investors. I'm excited for our CEO token, which gives investors equity stake Curzio research. And by the way, we paid a dividend every single quarter since we've been public. And for me, I can make that promise. We're going to continue to be at the forefront of this incredible industry because it's something I truly, truly believe in. Checks off all the boxes. It's good for consumers, good for issuers, good for everyone, just like Uber. Except with Uber, you don't have to buy it for the first time at an $80 billion valuation. You get the chance to invest alongside venture capitalists. So anyone looking to tokenize their business, small growth companies, feel free to give us a call. It's an easy way to raise money. That puts us on par with our larger competitors because we're able to raise money. Now we're a public traded company. We could use those shares as currency to purchase, to acquire, to hire good talent. That's how you compete with the big boys. Otherwise, you can't really compete with these guys. You're just too small. And that's what we're looking to do in an industry with publishing alone, which we're becoming a media company, opens up doors so much more, and advertising and stuff. As a publishing company, where our competitors generating billions, billions, and billions in sales, and we're a microdot. But by doing this, now it accelerates our growth trend. Now it's up to us. And if we mess up, at least, hey, it's publicly traded, you sell the stock, which is cool. You're not in a private company for 7 years, where year 3, year 4, management team doesn't know what they're doing. They lose their CEO, he leaves. You're sitting there, okay, I guess I lost all my money. And even if you're not, you have to wait 7, 10 years before you cash out. This changes that. So you want to learn more about a CEO token? Good news, we're holding our first ever annual meeting. We're going to update you on our financials, which are audited now. Puts us in a class of our own. I audited. Why? Because one is we trade on foreign exchange. And two, having audited financials is the only way you're going to get institutions to invest in your company. Because they want to see the financials. They want to see everything. The fact we're audited by a very good New York City firm puts us in a class that's different than anyone else in the industry. These are the steps I've been taking over the last 6 to 9 months, been incredibly busy to build this, to get that liquidity onto Merge, and now everything is coming together. So we're going to talk about this, the annual meeting, our first ever, on July 9th at 11 a.m. Eastern. And also going to highlight our growth initiatives, Curzio research going forward. Very, very exciting. Any one of you could register. It's for free. We're not selling anything. It's just for you to learn more about our company. And we're going to talk about security tokens. It's going to be really, really cool. But it's an annual meeting, just like Berkshire would have, just like Microsoft would have. And it's our first ever, again, July 9th at 11 a.m. Eastern. If you want to register, just go to CurzioEquityOwners.com. That's CurzioEquityOwners.com. And of course, I'll be sure to update you as that date's approaching. Again, we're not selling anything. It's just we want to learn more about security tokens and learn more about our business, how we're doing, and what we plan to do in the future to grow this possibly, which is my goal, into $1 billion company. Then tune in, and that's going to be on July 9th at 11 a.m. Eastern. Now, let's bring in Daniel. So much going on, right? Especially, crypto, security tokens, a lot of news coming out. I kind of beat that to death. But man, even outside of that, we just saw one of the biggest collapses in Bitcoin, which is crazy. But, I don't know if we want to start there.
Yeah, I got to say something, though, because I'm all in with you, and I'm excited about this. I know you talked a lot about it in the headlines until we get to the point about this regulation coming down the pike. That is not a good idea, in my opinion, when you have widespread. So I appreciated the conversation you had with Hester. I thought she did a good job. Mm-hmm. For just personally, it's encouraging to know that somebody with, I don't know her, but just what I perceived from listening to the interview was she's very down to earth.
Yeah.
Very personal responsibility. Mm-hmm. And I can't tell you how much I respect and how much we need that a lot more in government. Mm-hmm. And this isn't a knock on her, but holy hell. When she broke down the process of how shit happens and how regulations come about, if anybody thinks you need more rules and regulation, just look at the process they have to follow.
The process, and that's the reason even in China, they say, like in China, if they want something done, they pass it and the government passes it in 2 seconds. Not 2 seconds, but you know what I mean. But here, the whole entire process going through legislative process.
There's got to be room in the middle there somewhere between back and forth.
You know what the process is about, though, Dan? We all know. The process is about everyone in the middle from going to, hey, we need the changes to, okay, we're going to sign this. Everyone in the middle has to get a payoff.
Yeah. Oh,
right.
Yeah,
so that's what it all is. It's like, who's going to get? Oh, you want me to approve? Okay, fine. Okay, you need. Why do you think people change their minds when they need another 3 or 4 votes? How do they get them? How do you think they get them?
Absolutely.
They're going to sit them down and say, hey, you know what? Why don't you just vote for us because you're really cool and we're cool. No, here's what we're going to do for you. We're going to give you this, and this. Okay, cool, deal. I'll vote for you. That's what it is. So, going down
less. You just need less steps to take.
Yes.
Let's start with less.
And look, guys, I know for crypto, guys, we have a lot of crypto people that listen to this podcast. I'm not talking about full-blown regulation, but you have to have regulation to where your money's protected, just like an E-Trade, just like you have insurance on this thing. You're going to be paying taxes to the IRS if you're making money. You need this in order for the industry to scale because it's only going to scale if you get institutions in it. And institutions aren't going to come in unless you have this common sense regulation, right? So we'll see what happens. I think it's coming, and a lot of other people, like Morgan Stanley, thinks it's coming because they're investing big money in this industry. And you're going to see a lot more money pour into security tokens, which is
absolutely.
exciting.
Yeah, absolutely. And that's a good thing.
To Bitcoin, holy cow.
Yeah. Yeah, how about that? Real quick on the billionaire thing. So did this happen on the 17th? I don't know what day this. So Iron Finance has this Titan coin, stablecoin thing that went from, at one point it was $65-ish to basically zero or fractions of a penny of zero. And it also, at some point, it was around a $2 billion market cap. Now, in today's world, hell, that ain't nothing. So, $2 billion is zero. Nobody cares. It did get some recognition, and I got to give, I don't know whether I should compliment or kind of poke fun at Mark Cuban here, because he lost money too. This thing goes to zero. Everybody involved loses it. And real quick, I won't get in the weeds here because I've read a few different blogs, and the company blog from Iron Finance it's entertaining and it's sad because let me give you the end first, Frank. So this is the blog on Iron Finance after the Titan coin stablecoin is worthless. Okay. Skipping down to the very bottom, you guys can Google this Iron Finance blog or whatever it is. We've learned a great deal from this incident, and while nothing could be fixed in the current system, we will continue our journey with more products in the future. Translation, we screwed up this time, but next time, by God, we're going to figure this out. Now, stablecoins, sorry to jump ahead on, and just stablecoins are just backed by a cryptocurrency or a currency. So if you have a USD, US dollar stablecoin, in theory, Frank, If Daniel holds 10 of those, whoever created those or issued those to me has $10 in currency backing that. And it does make sense on stablecoins. That's why you see a lot of banks using them. That's why Facebook is getting into the game, because you can just send these back and forth, easy to track. You can settle up later. It's faster. It's efficient. There's a lot of good behind that. There's nothing new under the sun here in finance, Frank. A big seller of this caused the whole damn thing to crash. Algos kicked in. But this stablecoin was not backed one-to-one. It was just leveraged.
Yes.
It had 75 to maybe 50% of US dollars. Then it had a percentage of this other coin. And this coin is minted and destroyed based on blah, 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 blah. The easy solution here is there's a lot of leverage here. And kudos, here's where I'll give kudos to Mark Cuban. He did a quick Q&A with the Block Crypto website and just said, hey, you know, I didn't look into it enough. It was greedy. I still like decentralized finance. I'm still a backer of the space in general. But he said, you know, I just got greedy. And how greedy, Frank? I don't know about Cuban, but this was in CoinDesk, article from CoinDesk. You were earning 2 to 5% interest a day. Now, until it collapses, that's damn good return.
Yeah, but now you're looking at a lot of companies because, I mean, you're looking at tons of companies, tons across the board, tons. I've even interviewed some of these companies that same thing. They tell you how dangerous it is, but they'll provide 4%, 5%, sometimes 12%. You stake your tokens, you earn. That's all good. When everyone's making money, it's fine. But what's going to happen now? Because you're not going to get that. And leverage, again, we saw that in 2008, which is why the market crashed. It didn't crash because of subprime. It was the leveraging of subprime that crashed, because subprime only accounted for like 5% of the market or whatever it was, or even less than that in the housing loans. But it crashed because everyone was fully leveraged to it. So when you leverage something and you're forced to sell, I mean, the thing with Cuban, yes, okay, fine. He went on, he explained that, didn't do enough research, but that's telling, right? I mean, when your 17-year-old could come home and say, hey, Dad, you know, buy Dogecoin, it's great. Why? It's just going higher. Okay. And then you're like, wow, my son's an idiot because he tells me he was going higher at 6 cents and it's 70 cents and I could have bought 3 houses. You know what? Something's going to blow up, right? I mean, it's just a matter of time. But the funny thing, and it's ironic that Mark Cuban is now like, we need more regulation on this.
Yeah, that's what I don't like.
You're the one that's out there on social media platforms touting something you know nothing about, where people are following you in because you're a billionaire and they think that you did the homework on it, right? That's why people follow us in our recommendations, because we show the videos, we're doing the work on it. If we're wrong, we say we're wrong, we take our losses, we move on. But you know we're doing the work on it. He's admit, I didn't do the work. If you didn't do the work, why the fuck are you promoting it everywhere? Why are you promoting it? Because
at least he
these
admits
people
it,
are so influential. And I know everybody has to make their own decisions. I get it.
Right.
But people are widely influenced all the time, just by the media, by everything. It's very easy to influence people. And you're influencing people to buy something you didn't do the homework on. And it's, to me, that's sad. I like Cuban. I don't have anything against him. Again, people have their strong opinions for and against him, but that pissed me off a little. Now you want regulation. Now you want more regulation. And again, when you have these people calling it, but I think you're the last person I should say more regulation when you're the one that on all your social media platforms promoting the hell out of this, and a lot of people followed you in, and they lost all the money.
Absolutely. Yeah, and that's a bummer. And listen, he's got a lot of winners. We'll get to Dogecoin in a minute because I know you're still fired up about that. But that's my biggest problem is I don't mind that you were late. I don't mind you didn't do the homework. I don't mind you just, hey, this is going up, so let's play the game and gamble. You lose everything, lessons learned. The problem I have is now you want more regulation. Outside of just simple disclosures, there's enough disclosures here right away. It's not fully backed by a currency, and it's a blend if you read anything, or now, maybe they didn't, maybe it wasn't disclosed. I find a hard time believing that. But that's really all you need. And listen, if you follow somebody in blindly, even us, we're going to be wrong at times. So there's nothing wrong about that. And to scream regulation, that bugs me because that is the last thing we need. We don't need more of any of that. We just need to follow the rules like disclosures that we currently already have and move on. Now, the big difference here is, was it Ellen that he went on and talked about Dogecoin? I think it was Ellen's talk show.
Oh, yeah. Okay. I don't know.
And let's go back and forth on this because I know this fires you up. So what I liked about it is he covered his tracks because what he said was essentially, I don't have the direct quote, but he said, hey, Dogecoin is better than a lottery ticket. I think that's how he framed it. And that's exactly true. It's very hard to argue that. Why? Because a lottery ticket has an expiration date. Okay. They're going to make that drawing on boom, or you scratch this thing off and boom, you win or lose. Dogecoin, which to your point lost, I don't know how many billions of dollars. The damn thing's over 20 cents now. It's up 20% in 24 hours. It still has a $31 billion market cap.
Mm-hmm.
Okay. So in essence, it's a lottery ticket without an expiration date unless it completely goes to zero, which could happen, but I don't know if it's going to go to zero. I mean, how does it go to zero? Does people just quit creating it and quit using it all of a sudden? I mean, think about what has to happen for it to go to zero.
I mean, maybe that's
odd
to zero, but you have to realize that so if you own Microsoft, right? And Microsoft just hit I believe a $2 trillion valuation, one of the few stocks. It's at 52-week high. Not one of the few. NASDAQ's at all-time highs. But if Microsoft has a limited amount of shares, but if they constantly keep issuing and diluting the shit out of shares, there's unlimited amount of shares. There's an unlimited amount of tokens of Dogecoin. So they're just going to keep printing them and printing them and printing them and printing. It's kind of defeats the purpose of crypto, right? It's you want to be against printing, right? That's why Bitcoin is so popular. There's only 21 million, right? So this is totally different. This is like totally different. So this is something where they just keep printing until everyone's like, okay, and you dilute the shit out of it, and it goes lower and lower and lower, and it goes back down. But my biggest thing about Dogecoin isn't so much like, hey, you buy shitty assets and they go higher. I've seen it in stocks all the time, and that's fine. I mean, I saw Plug Power go. I mean, somebody just downgraded to a hold based on valuation. And, I have access to the report, and people don't know they lowered their target from like 69 to 30, right? So, in the meantime, you're trying to get it. Like, I see it. I see people invest in shitty things all the time. The thing for me, Daniel, which pisses me off with Dogecoin, is that I'm looking at something that is perfectly fine in today's world where anyone could go there and trade that. Go open up an account on Coinbase. It'll take you 10 minutes. Go through all the KYC, AML checks. Buy a token that was created as a bullshit token that has, just a limited supply, keeps dumping more of these on the market, and nobody says anything. And yet when we have something where we're spending a ton of money to audit our financials, give people equity stake, pay a dividend, and do the right thing, why is our part of the industry having trouble getting up and going? Which, again, that's changing now, and I'm very, very excited. But why has it taken so long? It's taken so long because everything has gone higher and nobody cares what everything. It's just like I said, I said with SPACs earlier. I said, SPACs, listen, the retail investor, you need someone to basically fuck at the end. And once you do that, that's fine. Now, retail investors are realizing, like, okay, I'm not going to buy something that goes up to 15, 16 when they didn't even tell you or announce who they're going to buy. These things are going to 10, 9, 8. And now they have to disclose all the BS deals that they're doing, these pipe deals. Again, you need someone at the end to screw. And once you screw them, unfortunately, let me give you this example, Daniel. When did the SEC and everybody else go after Madoff? When? When everyone lost money and they got killed.
Right, yeah.
There was people everywhere warning them. There was people warning them, telling us this is a fraud. It's a fraud. And we don't investigate it when you get destroyed. Yep. That's when they investigate, when you get destroyed. Now people are getting destroyed in a lot of this stuff. Now you're going to see more now you're going to see more regulation coming. Again, these are securities trading as they're not securities. When they come out with this regulation, it's going to be tough for a lot of these things. Not Bitcoin, not Litecoin, not Ethereum and things like that. Those definitely deemed utilities. But these other things, man, it's crazy. It is crazy. They have no utility functions. But that's why I get so pissed at that. It's more about the industry where, listen, I hope you all, if you buy, Doge, I hope you make 1,000,000%. And yeah, I hope you make, everybody makes money on it. But that's my emotion comes in where, how can you let this piece of shit trade where everyone could buy it and we're doing the right thing and we're having trouble. It's taking so long for this industry to develop, which again is changing. Morgan Stanley announcement and all this and great stuff from Hester. But that's what really pissing me off. But moving forward, I mean, this collapse in Bitcoin.
Yeah.
I mean, you're laughing right now, right?
Well, I just love the Dogecoin thing. I'm sorry.
No, it always gets me fired up. But that's why I get fired up. It's not that, hey, I wish I owned it. And no, I don't care. In me, it's about, putting everything that I know about this industry, my life into this, saying this is going to be great for everybody. And then I'm looking at something that's not really great for everybody. Yeah, that's where the emotion comes in. But you look at Bitcoin come down tremendously. And it's so funny because we so many of the bears. The Peter Schiffs come out and say, "Oh, I told you so," and taking a victory lap. Even though he's been calling for Bitcoin to go to zero since 2017. Again, it sucks when you like to be popular and do videos and you can bring that shit up and anyone can see it. But I don't know. I think he just forgets. I don't know if it's on purpose or forget. Like I've dealt with a lot of people, that they're wrong and they don't remember ever being wrong, which I guess is really, really cool.
Yeah, probably.
And I think that might be it, but, you're so freaking wrong on this, right? So immediately, it's almost like a great indicator where, again, he's out in full force at 29, broke 28, and then immediately this thing took off. I mean, what's to make of that? I mean, was it 34,000? It's a 20% move to the upside off its lows.
Yeah, and to be very boring for regular listeners, somebody is massively buying out there. We know that I saw on CNBC this morning that I believe ARK Funds through Kathy Wood bought a lot of shares they put a lot of money in the Grayscale Bitcoin Trust. I think she bought a lot more Coinbase. So that's interesting. But there's big players. My guess is it's institutional players and or hedge funds kind of trading this thing around. But what's hilarious to me about the whole bear thesis, and again, Bitcoin is just doing a remarkable, tremendous job of pissing everybody off. And as somebody who's entertained by this, I have to say it's amazing. If you're the Peter Schiffs of the world or you're anti-Bitcoin or anti-cryptocurrencies, that's fine. But it cracks me up how, okay, so it drops from 60 to 30, which is not new in Bitcoin or cryptos. And trust me, I say that if it sounds easy, that's because I'm attempting to be professional. It's not easy watching stuff drop 50% when you hold a little bit of it or a lot of it. So I don't mean it to sound like, oh, that's no big deal. My point is that if it's done that all the time and it keeps stabilizing and now it's up to 34, 35,000, how can you take a victory lap when it gets cut in half? And then if it rallies 20%, 24 hours, not even acknowledge that? That's what I like. So to your point, it's like an edited version of reality. It's like, oh no, that didn't happen. And that's fine. So, but listen, just like Mark Cuban or anybody else, whoever you're following, know why you're following them and do your own due diligence at least a little bit. Or don't complain if whoever you just blindly follow loses you money. I mean, it all comes down to a decision that you make to buy or sell something, and that's the way it is.
And who do you trust? Yeah.
Yeah, so that's okay. It just cracks me up how influential it is and how it upsets so many popular opinion. And they're brilliant for using it as a marketing thing. I mean, Peter
Schiff is a great marketer.
Yeah, absolutely.
He's a great marketer. He's a smart guy. It's just he doesn't know how to make money off of his thesis. And that's evident.
He does if it's by marketing.
He knows how to make himself money. He makes himself a fortune. But I would say almost anyone that follows him, I mean, his funds all underperforming, charges 5% fees, probably wise in Europe. Again, I say this on Twitter. He bashes people on Twitter. So I open the door. You can come on my podcast. I went back and forth with him a few times on Twitter. But again, he's a great marketer. I'll give him that. He's very, very smart when it comes to marketing, gets a lot of people on there. But it's funny because all the people who trash Bitcoin, I would say, and I'm using all, right? I like to use extreme terms. Actually, most of the time I hate using extreme terms, but it sounds better saying all. But all these people are bashing it a lot. What do they love? Gold, right? The biggest people who love gold. And I still can't figure this out, Dan. You got to explain this to me. This isn't going to be a rant, but just hear me out because I can't figure out why Bitcoiners and goldbugs hate each other so much. They both believe the government sucks and they're going to continue to print money forever, right? They both believe these assets are stores of value, most of these people. And most important, they're both hodlers, right? So hold forever, which, by the way, I always criticize goldbugs for that because I cover all industries and I'm very, listen, I speak at Vancouver conferences all the time. That's pretty much the mining capital of the world. I have great contacts, some of the biggest companies. We've got great recommendations in there, but I do other things. But yet the people I know in Vancouver, that's all they do. And I always criticize goldbugs for just saying, hey, I'm holding on and gold's going high, no matter what the conditions are, right? Even if the Fed, pushing rates to zero and we had no inflation, which we have for a while, right? From whatever, 2010, 11, 12, 13, 14, whatever, which makes stocks extremely attractive than putting your money into gold. Or real interest rates were positive, not at levels, they're so negative, they're at 1970 levels, right? Because inflation is going high and they're keeping interest rates low. But when interest rates are positive to where you can park your money in treasuries and make a higher return. So, gold loses store value. But Bitcoin hodlers, I'll say the same thing to you as I say to goldbugs. And this is about you making more money for yourselves, making more money for your family. And you have to understand opportunity cost. Because if you're looking at goldbugs, they're all in holding gold from late 2011 through 2019. Okay. And where did gold go? 1,800 to 1,200. So 33% pullback. Now it's 1,900, whatever, it was 19, it's probably around 18 today. Went down a little bit further. But now, you're looking at, okay, it came back a little bit. But still, where's your money from 2011 to today? You're basically flat. That's a very big period. In the meantime, The same time frame, the S&P 500 surged from 1250 to 2800. That's 45%. And that's a massive difference, right? Now, I'm not saying, okay, well, you should have sold at the top. No, but what I am saying is not so much trading back and forth, but you're looking at gold. Interest rates were zero. Fed continued to buy bonds. And we had huge corporate tax reform in 2017, which eventually passed 2018, but stocks roared higher in 2017 with all this stuff that was getting approved. Just the conditions for owning stocks was absolutely perfect. And you're like, a lot of these guys are just like, don't own stocks. You got to own gold. And, they don't even own gold stocks, but even gold stocks underperformed because it was, again, gold prices gone down. Just so they basically missed out on massive gains by being stubborn. Now, Bitcoin in December, prices started to surge past their old highs, 19,000. I could tell you, I won't say there wasn't one because there's a few, right? But even the most bullish Bitcoin bugs did not see Bitcoin going from 20,000, even from like 18, 19,000 December to 60,000 inside of 3 months. Okay, you had forecasts for 50,000 at the end of the year, 100,000 at the year, 500,000 by Winklevoss twins in like 7 to 10 years. Most are longer term targets, 12 months out or further. Nobody would say, hey, in 3 months, this is going to 60K. Nobody. So it went to 60K. And what happened? The hollers were like, hey, I'm holding on to it anyway. I'm holding it on. And I get that commitment. I actually appreciate that dedication. But in reality, it's just not smart. And there should be always a level where at least you could sell a little bit of your investment, maybe 25, 50% of your position, and while letting the rest rise, especially if you were right on your thesis. Especially with Bitcoin, where, governments are mostly, again, we saw what China did, right? And that pushed the market down to 29,000. What happens if the U.S. comes out and doesn't allow Bitcoin payments through banks all of a sudden? I mean, that's going to destroy this industry. People are like, whoa, I find ways to buy. Yeah, the Bitcoin, you'll find ways. You're basically eliminating any institutions coming into Bitcoin now. Could that happen? I don't think so. I own Bitcoin. I own gold. But the fact is, there should be a price where you should look at it and be like, okay, I'm going to take some off the table because I was right. I mean, in order for Bitcoin to go to 100,000, you need institutions to come in. If you don't believe that, you're naive or just stupid, right? You don't understand numbers. You need institutions to come in order for Bitcoin to go higher. So, governments are a big deal. We know governments, look at China going crazy, right? So there's a chance that could happen. But my point is, there's a time to own gold, which I do right now. There's a time to own Bitcoin, which I do right now. But going all in and highlighting a full position in an asset, which accounts for most of your net worth forever, is just not a smart strategy. And you could point to, look at Bill Gates. And yeah, there's some examples, but most people know. I mean, imagine selling 25% of your Bitcoin at 50 grand. So you missed a 15% move, higher. Say you sold it on the way up, not on the way down. You sold it on the way up, it goes even higher. You're like, now it's what, 34,000? I mean, it was 29, 28. I mean, wouldn't it be great if you take some of that and bought back into it, right? Add to your Bitcoin position on a pullback, because that's what the greatest investors do. They take big positions in assets that nobody wants or are super distressed, massive positions. And which so many Bitcoiners did in 2016, early 2017, when people were making fun of them. Now who's making fun of who, right? Which is amazing, great for them. But when it surges to a price that you never thought it was going to get to, and you don't take some off the table because you're just saying, hey, I'm a holler, we're going to hold this forever. To me, I mean, sell some and maybe you see another crypto, DeFi play, NFT play, whatever, that you put more money into it. To me, that strategy is just, I don't know, to holding on for dear life. For so many Bitcoiners who have made so much money, and again, it's down 50%, maybe it retests the highs, but it's not a smart strategy if someone's been doing it 25 years. It's okay to take a little bit off the table, especially when you're right, especially when it's at a price that you never thought it was going to be at. And that's what I don't understand. Maybe it's me.
That's it. That's your simple question.
That's it. So why to go? But getting back to why do gold bugs and Bitcoiners hate each other so much when they have so much in common?
Well, this is my opinion. So there's got to be some jealousy there. Okay. And let me use one of the greatest movie series of all time, except the third one, Godfather. Okay. Mm-hmm. If you're Fredo and I'm Michael Corleone, the sequence is you're going to take over the family. Well, what happened? That ain't how it worked. Mm-hmm. And there's that great scene where he says, that's not how Pop wanted it. Well, that's how I wanted it. That's not how I wanted it. So that's great. If you're gold, you have everything in your favor going for you. You have the longest financial history to record, showing you that you are a store of value. You can withstand everything and anything. People view you, want you, dig you up, hold you, blah, 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 blah. And then comes Bitcoin. And it would be very difficult to think, man, gold should be trading 10 times higher than it is right now. And it possibly would be. I have no doubt it'd be a lot higher if it weren't for Bitcoin right now. And that would just bug the hell out of you if you were all in on that and you're a principal guy saying, hey, I get the argument. I don't think it's enough to stay away, and I don't think it's where the argument ends. But I get the thing where you're sowing on gold and you have so much history and proof behind it and saying, hey, I can hold this in my hand. If the internet goes out, your Bitcoin's screwed. Yeah. But if we get to the point where you're bartering with gold, we're in a real terrible world. And you're counting down weeks and months now, because you also better have ammo and food and stuff like that to go along with it if you're paying for things in gold. So there's got to be some jealousy, in my opinion, on that, because it should be king, and Bitcoin is no doubt taking over the limelight. It's no doubt taking over in the percentage returns. I mean, it's absolutely gone gangbusters. So I think that's crazy. Having said that, this whole argument and gold bugs and Bitcoin bugs going at each other is just entertaining. The world's big enough for both. You ought to own both, in my opinion. And yeah, I get the jealousy side though, but big deal. Buy Bitcoin.
Yeah.
And I guarantee a lot of gold bugs have Bitcoin. They just would never admit
I
it.
tell you, with the gold bugs, they have a big problem, because going forward, like, the next generation will never own gold.
Frank, don't use that word.
They're not, but it's not exciting. It's not, digital is much more exciting. But
it could be very quickly. If gold goes to 2,000, 2,500, 5,000, your gold stocks are going to go up 500%. That's exciting. And that'll attract more people and all that. I still think that you're not going to see, I mean, for gold to go up that high, I would think, well, maybe not. I mean, Bitcoin went a lot higher, but I don't know if Bitcoin will follow because of what the Fed's doing and stuff like that, money printing. But yeah, the younger generation, look, we're tapped into that generation. They email a lot, they call a lot. They're you see them everywhere, social media blogs and stuff. There has to be a level of excitement, and they're listening right now to the biggest influential people in Bitcoin, and they're defending themselves against the Peter Schiffs and Gold, telling them that anyone who owns Bitcoin is an idiot. And when you see that, it provides more passion, right? It's like, a teenager dating a guy you don't want to date. Don't ever tell her she can't date him, because then she's going to marry him, right? I mean, you don't want to say no. And the more you say no, the more you want to do it, right? It's just the way it is. But, that younger generation, look, there is a place for gold. Again, I think the way the market is right now, Daniel, gold's going to go a lot higher. I'm positioning myself, also into cryptos, and I have pretty decent sized positions in both. But yeah, it's just surprising that everyone just can't get along, right? That's why I like having Frank Holmes on, because he's in both industries, and you could be both. You could be long both, and it's okay, right? So anyway, Daniel, we say this a lot, that this is being broadcasted, and we do videos, which are really, really cool, getting very, very popular with a YouTube channel. But I'm going to tell you something that I did that's going to make everybody come on and watch this instead of listening it. Not that I want you to, because I like iTunes and it's awesome. Yeah. But my daughter, she's been bugging me since Father's Day to do a TikTok video with her, a dance. Oh, nice.
So I agreed, and I did it last night. So,
oh boy,
if you want to laugh,
you're gonna post that.
It will be entertaining. Any of you that have daughters out there, or
oldest
kids,
or youngest? Who'd you do it
oldest?
With? Oldest. Okay.
Yeah. But any of you who have kids out there, you understand. Like, you just that walk of shame just to make them proud and stuff like that. And she was very exciting and made a laugh at my expense, which is going to be very fun.
So where is this going?
I'm going to put this on our Curzio Research YouTube page.
Okay.
So this is going to be up there if you're watching this, and it's probably about 30 seconds. Thank God. It's only 30 seconds.
It's a long time, though.
But hey, 49, dancing, it doesn't get better than that. I'm loving life, hanging with my daughter. So just think of it that way, because after you see it, you're probably going to send me something at my email, frankcurzioresearch.com, and make fun of me. But anyone that has kids understands this.
No, that's funny.
But we'll make that funny. And the last thing, and also if you're going to watch, you're going to get to see, right? It took me about 47 years. I'm starting to grow a little bit of a beard.
Yeah, I noticed that the other day.
The gray comes in. I don't know. I don't know. I'm not crazy about it, but I was just like, I didn't feel like shaving. And next thing I know, but seriously, I could never grow a beard. Now it's coming in a little bit. And everyone's like saying, hey, you're going to grow it. I'm like, I don't know. We'll see.
Why'd you decide to grow a beard? I'm lazy. I didn't feel like shaving.
Yeah, I just didn't feel like shaving. I'm like, all right. And then, a week went by, and it was a week and a half. So now it's coming in. So you get to see my scruffy, ugly face if you want. But the last thing here I'm going to mention is the U.S. Open.
Yeah.
We had our predictions. Look, you had some day one. I think both of you guys were on the leaderboard, but what a U.S. Open. I mean, listen, I was like, John Rahm was my guy, and, I got lucky. The guy I just love golf.
He also took the favorite. Let's point that out. He took the
but how
betting
often
favorite.
is a favorite win? How often is a favorite win?
I'm giving you hell.
Right? So, seriously.
He didn't go out on
and he
a
never won a
limb.
major before. So, but
That's true. That was his first. That was great to see. Anytime watching them win their first is pretty sweet.
I love it. It's so different golf because he took it, right? He won it. No questions. He birdied 17, birdied 18, which is awesome to see. When I'm watching a net game, people saying that's a classic. It's a classic when you have 3 baskets in overtime and the last shot's an air ball. It's not a classic. When you have Kyrie Irving, one of the best players on the team, injured, it's not a classic. No, that's not a classic. So when I see 2 teams playing and they're playing not to win, like both of those teams, it was terrible for me to watch. And people were like, oh, it's a classic. I was like, that Nets Milwaukee game is not a classic, but watching this was classic. Just seeing a guy that's going out there, nobody, I don't think, birdied 17 and 18, maybe a few people, but to do that under that pressure and to win, I mean, that was incredible. And so surprises with Shambo. Right.
Yeah.
I love the fact he was just like, F it. And just, if I'm losing, I'm going to go down in flames. I think that people like that, kind of like a John Daly thing.
Oh, I don't know.
And also, Koepka was surprised at him. He was up there and just kind of like the last day. But I think he's almost there. I know
I hope so.
Yeah.
Him and DeChambeau, that feud is hilarious. It just shows you there's nothing new under the sun, people. It's
they
just like
had
high
a video
school.
on it. Did you see the latest video on it?
No, I didn't.
Oh, my God. Koepka was just like, was like, no, he's like, we're not going to have dinner anytime soon or anything.
Oh, I did see that question. Yeah,
I love it because
it's not like this is a good teachable moment too, because I liked how Koepka was very honest. For those of you non-golfers, 2 rich, wonderful professional golfers don't like each other, and the media is playing it up, and they're having fun with it too. So that's good. That's the background story. The funny thing is that there's nothing wrong. They're not being crazy towards one another on camera. They're not threatening each other. And Koepka was just like, yeah, we just don't like each other. I mean, that's fine. Mm-hmm. There's how many billions of people in the world? Not everybody gets along. Not everybody's personality meshes well. It's okay not to care for somebody. You don't need to be a prick to them. You don't need to be
everybody
rude.
likes you, you're being fake to yourself.
Well, yeah, it's just
to please everybody. Yeah.
So it's just good to see, like, they don't need to, I hope it doesn't get, WWE dramatized and they don't play it up too much. But I just love the simpleness of, not everybody gets along. That guy gets on my nerves. I get on his nerves or her nerves or whatever. Mm-hmm. It's just, but it is entertaining. I love golf. That's really the only professional sport I follow. That and the hockey playoffs. We're going a little long here, but if you're not watching the hockey playoffs, you ought to, because it's exciting. Those guys are just flying around. It's hilarious.
They're playing today. Should be a really good game. Hopefully the Islanders take this. The Islanders take this game, but they're going to win Game 7. I do. Even though Tampa Bay hasn't lost a game after losing one game, they haven't lost 2 in a row in the playoffs. I think they have the all-time record in NHL history. But I think if the Islanders come back after that beaten and win, it's going to put a lot of pressure on them in Game 7. I think they could take it. Should be interesting. Let's see. And Vegas and Montreal on the other side. But Dan, thanks so much for coming in. Yeah, a lot of things happening. Bitcoin is the main story. Security tokens too, guys. Very, very excited about the industry. But Dan, thanks for breaking down the news, man. I really appreciate it.
Yeah, always fun. Cheers.
All right, buddy. So last thing here, guys. Look, we're looking for a sponsor for Wall Street Unplugged. We have a very, very great reach. At several companies reach out. We're using advertising agencies, but some of the companies they were giving us, I'm not going to put any company in front of you. I don't care how much they pay. Just for me, I'm only doing that for companies that I believe in. So there's a lot of you that own your own companies. A lot have reached out in the past, and I said, you know what, let's just go to our own list and see. But we are looking for someone to sponsor Wall Street Unplugged. We are getting a lot of names in, but for me, it's all about having credible businesses and those sponsors and companies that you believe in. So if that's you, send me an email, frank@curzioresearch.com. That's frank@curzioresearch.com. Other than that, everything else is really great. Having fun. After this podcast, I have to leave to drive 2 hours to Savannah because my daughter has a big competition. She's doing great in gymnastics, my youngest daughter, at 8 in the morning on a Thursday. So I guess nobody works in Georgia either. I don't get that. 8 a.m. Thursday. So I'm leaving after this, going there, and I'm probably going to come back in the afternoon and do some work to my Frankly Speaking podcast, which only goes out to anyone who's a paid subscriber to our services. They get that Friday Q&A podcast, get lots of great reviews for that. Only goes out for people who paid. Doesn't matter what product you own. You could own one for $4 a month or the one for $5,000 a year. You get access to that podcast and get to ask me questions personally, which is really cool. So guys, any questions, comments, whatever, feel free to email frank@curzioresearch.com. That's it for me. Thanks so much for listening. Appreciate all the support as always. And I'll see you guys in 7 days. Take care.